Australia's unemployment rate stays around a 50-year low. The local share market surges as US investors fear a recession, and Microsoft becomes the latest tech company to shed thousands of jobs. It's Friday, the 20th of January, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. I'm scared about what happens next. Yesterday we did this, and I ended up with a new nickname. Checkout.
Yeah, Sean, self-serve, checkout, Aylmer.
Yeah.
But today, no, nothing. I figured I gave you such a hard time yesterday that I thought I should give you a bit of a break today.
Yeah, I've decided to embrace it. I was quite put off yesterday, but I think I'm going to have to embrace it. Feel the love.
Well, that's the thing with nicknames. You can't do anything about it. Once someone has anointed you with a particular nickname, then you just have to roll with it until you come up with a better one, like I try to do for myself all the time.
Well, the local unit, that's you.
That's me now. Now, Sean, we're back with our regular programs this week, and if you're hoping for a kind of an easy week to just kind of settle back in, it's been far from that. We've had markets, we've had international politics, we've had plenty of corporate news. There's been a lot happening. So we'll be back into it fully next week. We've got some great interviews coming next week. We've got the afternoon edition back, our Fast 5 episodes for anyone who wants to hear the news in just 5 minutes. Stephen Kukulis back on Monday for the week ahead. And tomorrow, we have the weekend edition back as well with our
fantastic.
Fear and Greed colleague, Adam Lang, which is always a bit of fun, bit of turning business news into a competitive sport.
To be honest, that's got very little to do with Adam. It's more you and me, I think.
Yes, yeah. It's just the undercurrent of competition that's in every podcast that we do.
Yeah.
Just something that just
exactly.
comes out in full on the weekend edition. So it is not to be missed. But anyway, Sean, plenty to discuss today. The main story this morning, Australia's unemployment rate held steady at 3.5% in December, even though the number of people in work fell by 14,600.
Yes, the 3.5% number was the same as the November figure, which was revised up from 3.4%. So unemployment is around its lowest level since the early 1970s. Now, the loss of jobs was unexpected, and Federal Treasurer Jim Chalmers said the disappointing result was largely a combination of a slowing global economy and higher interest rates beginning to act as a brake on growth. No surprises there, but Michael, let's face it, you can't be too upset about a 3.5% unemployment rate. Part-time jobs fell by a little over 32,000. They're now down 1.1% over the past year. Full-time jobs growth has been much, much stronger. There were 17,600 new full-time jobs in December. That's more than 5% higher than a year ago.
Sean, I'm going to put you on the spot a little bit here. And when you mentioned that the figure for November was revised upwards from 3.4% to 3.5%, because I remember when we were talking about it in December, when the November figure was released, we were talking about it being 3.4%. Why would it be revised upwards?
Well, the figures that we always talk about and most media report on are always preliminary figures. Often in economics, there's lots of rounding errors. So by the time you actually get the final data in, go through it, it may change by 0.1%, something like that. Always very small amounts. Now, having said that, it's not an exact answer. It's something that I think we can ask the Cook when we speak to him on Monday morning.
Oh, great idea. All right, so 3.5% in December. What does it all mean for interest rates?
Well, it will play into the Reserve Bank's deliberations in its meeting in a couple of weeks' time. Market economists are mixed, let's say, in terms of what they think will happen next. A pause or more rate rises. Certainly few think it'll be 50 basis point rises, more like 25 basis point rises. I think everyone agrees there shouldn't be too many more rate rises. Now, the Australian labour market is still in very good shape, but it's probably peaked, so it will soften from here. Now, monthly inflation readings are pointing to a potential lower December quarter CPI than first thought. That's good news. That figure comes out next Wednesday. Clearly, at the Reserve Bank meeting in the beginning of February, it will be a really close decision on whether they lift rates or pause.
All right, we will wait and see. Sean, the local share market hit a new high since April last year, and it's only off 2.5% from its peak. And that's despite fears of a recession in the US.
Yes, I mean, and particularly in the last 24 hours, the Australian market was really going alone. Mind you, those unemployment numbers probably helped that. The market is up nearly 6% this year, with materials, telcos and healthcare companies doing particularly well yesterday. So far this year, much of the boom has been among resource and tech companies and especially gold stocks. Market leader Newcrest Mining's up more than 40% since its bottom in late September last year. Pretty good. Remember, in risky times, investors like gold, considering it a safe haven. Hence, that's what's happened at Newcrest.
All right, so clearly the local market did well, but it must be said it didn't get much help from Wall Street.
No. Now, look, bond traders on Wall Street have lowered their expectations of further rate hikes globally after retail sales in the US were weaker than expected. This had an impact across most major markets. A bit like last year, rates are dictating sentiment in the US and elsewhere. This is the hard landing versus soft landing debate. Can the Federal Reserve engineer a soft landing for the US economy? Pundits aren't so sure on that one. Weak retail sales figures, alongside data in recent weeks suggesting inflation has come off the boil in the US, has pushed down oil prices. That's good. And the S&P 500 fell 1.6% yesterday. Investors are now pricing in 50 basis points worth of cuts later in the year. Yes, cuts later in the year, though in the short term, rates are expected to rise a bit more.
Okay, now National Australia Bank has become the second of the major banks to create a stable coin called the AUDN, which is not really the catchiest name, I suppose, to allow its business customers to settle transactions on blockchain technology in real time using Australian dollars.
Yes, now we have the Financial Review to thank for this story. Basically, it highlights the role of banks driving innovation in the digital economy. National Australia Bank is aiming to launch mid-year for transactions including trading carbon credits and sending money overseas. NAB's minting of a stable coin, which is fully backed one-for-one with Australian fiat money held on trust in the bank on the Ethereum network in December, comes 9 months after ANZ created a similar product known as $DC. The creation of these stablecoins, Michael, by the individual banks has emerged after the Big Four attempted to create an industry-wide Australian dollar stablecoin early last year. That effort failed due to competition concerns, and banks now are at different stages of their crypto strategy.
Now, I mentioned this one at the top of the show, Sean. Microsoft has become the latest large tech company to reverse a pandemic-era recruitment spree in the face of a slowing economy, announcing plans to shed 10,000 workers by the end of March, or nearly 5% of its staff. This is big.
It's really big, and the latest round of job cuts in the tech sector, as you mentioned. Obviously, there was a boom in the COVID period. That's all changed. Microsoft added 40,000 workers in its last financial year, more than double the year before, after Chief Executive Satya Nadella predicted that customers would continue to spend heavily on technology despite rising inflation and economic stresses. But yesterday he was much more cautious, saying customers were now optimising their digital spend. Early this month, Amazon announced plans to cut 18,000 jobs, while software rival Salesforce, which had almost 80,000 employees at the end of October, said it would shed 10% of its staff. Facebook and WhatsApp parent Meta said late last year it would cut about 13% of its workforce. Now, these job cuts come amid a sharp slowdown in most of the tech sector's revenue, including Microsoft.
Yeah, pretty nervous times for workers in the tech sector at the moment. Sean, Prime Minister Anthony Albanese has paid tribute to outgoing New Zealand Prime Minister Jacinda Ardern after Ms Ardern abruptly resigned yesterday, saying she didn't have enough in the tank to keep going.
Yes, Mr Albanese called her a leader with intellect and strength. Now, Kiwis are going to the polls later this year in October, and Ms Ardern said she was stepping down for personal reasons, not because she didn't think she could win the election. Jacinda Ardern is very popular outside New Zealand, less so internally. Yesterday she said, and I quote, "I'm a politician who is first and foremost human, and so leadership means being willing to step back and recognise when actually it's time for someone else to do the job." She won a landslide victory back in 2020, forming the first majority government in New Zealand's multi-member electoral system. She's won plaudits for her sensitive and empathetic response to the Christchurch mosque massacre. And in 2018, she became the second world leader to give birth while in office. Mr Albanese said the New Zealand Prime Minister had demonstrated empathy and insight and been a fierce advocate for her country and a great friend to him. Good luck to her.
Yeah, absolutely. Well said. All right, Sean, everything's back to normal next week. Plenty of interviews coming up. We've got some great things lined up, so you'll want to stick around for that. Make sure you've hit follow on the podcast. Thank you very much, Sean.
Thank you, Michael.
It's Friday, the 20th of January, 2023. As I said, make sure you hit follow. Join us online on LinkedIn, Instagram, Twitter, and Facebook. We are basically everywhere online. I'm Michael Thompson, and that was Fear and Greed. Have a great day.